Hey Vardhaman, IPL is about to begin. So after the match, late at night, where should we order the food?
Zomato है ना.
Bro, mass layoff is going on. Where will I get job?
I don't you know Zomato has announced 800 vacancies. So guys, globally it's recession, but Zomato has vacancies and its stock price is available at the rate of tomato. Let's evaluate Zomato to check whether we should take delivery of Zomato or not. Hey guys, this is 𝐔𝐈𝐍𝐊𝐒𝐋𝐈𝐒. Welcome to ATS, India's only broking company which provides zero brokerage for both delivery as well as intraday. And we are also into wealth management services. Now, coming to food delivery business, this was started way back historically in India by the Dabbawalas around 100 years back. But this was all done manually. And online version of it was started firstly in India by Food Panda in around 2012, and it got a crazy valuation of 21,000 crore, and it was also operating at 45 countries. But later it became bankrupt and it was also acquired by Ola at 250 crores. But Ola also tried to pump in some money to revive it of around 500 crore, but even it failed to revive it. And then Zomato started food delivery business in 2015, and it has primarily three business vertical. Coming to its core business vertical, which is food delivery, let's evaluate and understand the business model of each of its vertical, starting with food delivery business model. Zomato's food delivery business model consists of several steps. Firstly, the user will explore various restaurants and will place order using the Zomato's mobile application or website, and then the restaurant will receive the order request and start preparing the meal. Once the order is ready to dispatch, it will be handed over to the delivery personnel who will deliver the meal to the customer at their preferred location, and then the customer will receive the meal and he will make the payment and also share his review according to his experience. This simplicity encourages food lovers to order food online. In terms of numbers, Zomato's gross order value grew from 55 billion to 66.8 billion, a growth of 20% in a year. However, there was a slowdown due to macroeconomic slowdown in mid-market segment, a boom in dining out, and a boom in travel at the premium end. However, the company continues to expect to grow in the upcoming quarters. Food delivery is the core business of Zomato, and its contribution margin has improved to 5.3%. Its adjusted EBITDA has also improved from minus 37% in financial year 19 to minus 1.8% in financial year 22, and is currently at plus 0.3%, leading to a positive adjusted EBITDA numbers of 23 crores in the current quarter. This was the second consecutive quarter wherein Zomato has given positive adjusted EBITDA numbers. It will be interesting to see if Zomato can continue to give positive adjusted EBITDA numbers in upcoming quarters also. And Zomato's food delivery expenses is primarily due to fuel cost, which has peaked, and also the inflation in India has peaked. Coming to the next vertical of Zomato, which is Hyperpure. It is a B2B business model which provides fresh, hygienic, high quality ingredients and supplies to restaurants clean directly from the farm, thus improving the overall quality of the food prepared by the restaurants. The model of Hyperpure is a win-win model for both Zomato as well as restaurant, because if the food quality is improved, it will lead to more number of orders from the customers. What's in Hyperpure is the infrastructure, the operational efficiency, and the scalability which it has. It takes years to build, and also it can supply at least 25% of raw materials to the restaurants. It is highly scalable and is an amazing business model. Now coming to the numbers, its revenue is growing exponentially. As you can see that the revenue has jumped 2.5 folds from 1.57 billion to 4.21 billion between quarter 3 financial year 22 to quarter 3 financial year 23, its EBITDA as a percentage of revenue has also improved to minus 11 percentage from minus 19 percentage. Also coming to the number of cities, it was present in financial year 19 was just 1, and in financial year 22 it increased to 22. And in the same tenure, the number of restaurant partners have increased from 1000 to 51,000. Hyperpure is a multi-city business with each city at a different stage of profitability curve. Oldest city Bangalore is already profitable, hence there is a proof of long-term profitability of this model. But one negative is that Bangalore city took almost 4 years to become profitable. Now when a city like Bangalore takes 4 years to become profitable, then other cities might take a longer period. And remember, the first few years of profitability will actually not be profits but the recoupment of earlier losses. Coming to the next vertical of Zomato, Blinkit. It helps customers order groceries and essentials online. Its main rivals are Tata Group, Big Basket 1mg, Swiggy Instamart, then you have Zepto, Dunzo, etc. And if you look at the Zomato's quarterly results, Blinkit has been growing phenomenally. As you can see, the gross order value have jumped by 50% from 11.8 billion to 17.5 billion. Also, the number of orders have increased by 42% to 31.6 million from 22.2 million in the last 2 quarters, and also transacting users have increased by 41% to 3.1 million. However, during this period the average order value have increased only by 5%, which means that there is no growth in the average sales per user per month. This lack of growth in the average sales per month per user is concerning for the Blinkit and the entire quick commerce industry. The thesis behind the Blinkit and other similar companies were that the customers will make frequent orders due to the convenience of ordering on the go. But if the average sales per month per user is not growing and only the number of users is growing, then it will only help in increasing the revenue but will not increase the profitability. To address this issue, either the average order value needs to be increased or the order frequency of the customer should be increased. However, average order value is bound to saturate because the customer will continue to consume 2 to 5 times as per his consumption, whether it is online or offline, and therefore it may turn out to be a costly affair with only revenues increasing and not profitability. In such a case, Zomato should try to reduce the customer acquisition cost. Further, Zomato's acquisition of Blinkit was not well received by the market and the stock had a good correction because Blinkit was a loss-making company, and it was also known that Zomato will have to continue to burn money for Blinkit in future also. But still, Zomato had paid goodwill for Blinkit. And in presently, Zomato has a negative EBITDA, and majorly its negative EBITDA is attributable to Blinkit. If Blinkit was not acquired, Zomato would have soon become profitable. Now coming to the strength, the recent budget wherein the basic exemption limit has been increased to 7 lakh rupees and the deductions have been removed where investments were required to be made, majorly in the new tax regime. This will lead to more disposable income and will further accelerate the consumption. Secondly, if you observe, Zomato's major expenses is advertising, which will decrease with passage of time as it becomes popular. Thirdly, the online food delivery users is very small in India when compared to the total online users in India. It's just 8%. The median age of Indians is 28 years, which means there will be more food ordering online. And also, if you see, the older generation are hesitant to order food online or eat outside, but in today's time where both husband and wife are working, they relish eating outside food. And with urbanization, this trend will continue and increase. And by the time today's generation become old, they and the next generation both will start ordering online more oftenly. And the number of customers who start ordering food online using their Zomato platform start to order more frequently as they mature. For example, you can see the person who started ordering food online through Zomato in financial year 17 has started ordering 5.1 times food online in Zomato over a period of 6 years. Now, coming to opportunities, Zomato recently launched Intercity Legends, where you can order and relish legendary dishes from legendary restaurants across cities like Pav Bhaji of Mumbai in Chennai, Chole Bhature of Delhi in Hyderabad, 𝐔𝐒𝐄𝐅𝐔𝐋 of Bangalore in Ahmedabad, and this may have huge scope. Zomato also started Zomato Pay, wherein it provides cashless payment feature to the diners at restaurant. Zomato again started Zomato Gold at an introductory price of 149 rupees for 3 months, wherein customers will get free deliveries up to 10 kilometers, discounts on food ordering, and it has received an overwhelming response with over 9 lakh customers using Zomato Gold within a month. Further, Zomato can also start giving loan to restaurant as well as customers directly by itself and not through BNPL. Imagine customers getting idli dosa or chole bhature meals on loans and or EMI. And for this, Zomato can charge good rate of interest, and it can be a very good highly profitable business. Zomato can start its own chain of restaurants or cloud kitchens, hiring India's best staff. And also Zomato can start giving consultancy to the startups in food industry regarding the data of customers' preference, then sourcing, and how to improve the taste of its services. And also it can give consultancy regarding how to start the business. Zomato can also start organizing and catering services for wedding, birthday parties, events, etc. And also in food industry, if you see, it is very difficult to get the right staff and retain them. So Zomato can also provide manpower services for the restaurants. Now let's talk about the challenges. Blinkit is the biggest challenge of Zomato, that how it will turn it profitable, which has already been discussed above. Secondly, if you see in Swiggy and Zomato, there were 30% of the users who were using both the apps in 2021, which means that it is very difficult to retain the loyalty of the customers. Whichever platform generally offers more discount, the customers tend to shift towards that platform. For this, Zomato also launched earlier Zomato Gold, Zomato Pro, but it failed. And also Zomato has exited from the developed countries like US, UK, which is a very big disappointment. Also its acquisitions generally has been question mark, like the recent Blinkit or 𝐔𝐒𝐄𝐅𝐒, which has not been appreciated by stalwarts, because generally the acquisitions help the company in growing, but till now Zomato hasn't been able to prove that. Another concern has been Zomato scam. So recently there's been news that the delivery personnel offer the customers who have placed say for example 1000 rupees order, they usually say the customers to give them like 200 rupees, and it is shown that the order has been returned, which is not actually. Dipinder Goyal says that he is aware of it and is trying to work on it. But one way by which it can be tracked is that the Zomato will be having data of orders on an average, data of average orders returned by employees, which is say 3%. And if an employee is having, or that is delivery personnel is having a return order percentage or as 8% or above, then he needs to be tracked. Another concern may be the recent resignation from top management, but it may be due to salaries, because the key managerial personnel have not got any increment or have either reduced or waived their salary in the past year. Like for example, Dipinder Goyal, MD and CEO, have voluntarily waived off his salary for a period of 36 months from 1st April 2021. The median salary hike of employees in financial year 22, other than the managerial people, has been 10% in Zomato. Also, the rivalry of Zomato, if you see, like Uber Eats, Amazon have already exited, and presently it is a duopoly market of Zomato and Swiggy. So let's compare Zomato versus Swiggy. So as you can see, in almost majority of the parameters, like the number of restaurants listed, the profits and the sales, etc., Zomato is better placed than Swiggy. But if you see the valuation, Zomato is only having valuation of 50% of Swiggy currently. So let's do the valuation of Zomato. We cannot do valuation of Zomato using conventional PE ratio or PB ratio. We'll have to do through, let's say, like EV by sales ratio. Now the globally listed competitors of Zomato are like Metan or Doordash, etc. So as you can see, their EV by sales ratio was around 3 to 14 as on financial year 21 data, and Zomato it was 25, but presently Zomato EV by sales ratio has come down to 6, which is reasonable. Evaluate Zomato through another parameter, that is market cap by sales. So its sales anticipated for this financial year will be around 7,000 crores, and its market capitalization, which is around 44,000 crores, which gives us valuation of 6.4 times, which is reasonable. And Zomato has had a good correction from a high of around 169 to presently 50 rupees, which is a 70% correction, and it is near its intrinsic value of 40 to 45 rupees. So if you believe in its story, you can acquire it. And once Nasdaq starts recovering, you will see all these startup companies like Cartrade, Paytm, Zomato will also start surging, because at that time no one will see profitability. And also in Nasdaq, there are many companies with zero profit and are anticipating profits in 2028 or 2030. Zomato's major expenses is not on acquiring fixed asset, but on acquiring customers and their data, which they get by marketing, and which is completely shown in P&L account generally. And in case of other companies, their major expenses will be on fixed assets generally, which will go in balance sheet if it is a manufacturing company, and due to which also Zomato's loss appears to be more. Zomato is a money losing business, but just because it is money losing business, it cannot be avoided, because there are going to be many young Indian companies currently which are not having profits but are going to be the best investments in the next 20 years. And remember, Amazon also took 14 years to become a profitable company. So if you are an aggressive investor, you can have Zomato in your portfolio. Thank you.